Okay, this week is all about US economic policy. Instead of talking about US economic policy at large, we're going to focus in on narrow in on a case study. So, we're going to start off by looking at how bad economic inequality is in the United States. And then we're going to discuss what the role of automation or artificial intelligence may play in worsening US income inequality and wealth inequality. And then lastly, in your reading response, you're going to focus on whether or not you think universal basic income might be a solution to the economic inequality that may result from automation and artificial intelligence. So hopefully you already watched that video that came before this one in the module. It was really depressing. I don't know if it's the piano in the background, the ominous music, but the video makes you feel like the economic system status quo in the United States is really kind of scary and problematic. So a little overly dramatic, but I like the visual representation in that video. It's helpful to you guys. There are a bunch of different reasons why economic inequality has gotten worse in the United States for the last couple decades. We're not going to spend a lot of time on this in this class. However, I did want to mention a couple reasons why this is. One of the reasons why economic inequality has gotten worse is because there are fewer Americans now in the workforce that are a part of a union. Maybe some of you guys are a part of a union right now at your workplace. If you work at a grocery store, or if you work at an elementary school as a teacher, if you work at even some restaurants. Amazon workers are famous for having tried to form unions but having failed in doing so. But unions are forms of worker organization or solidarity. And when you have solidarity amongst the workforce, you can then put pressure on employers to pay higher wages and offer more benefits to the employees. Right? So the fact that there are fewer people in unions now, a part of unions in their workplaces, tells you that it's likely that there are fewer worker protections, right, in that particular workplace. In addition to that, we've also lowered taxes on the rich. Specifically, we've lowered the top income tax rate. In addition to that, we have decreased the capital gain tax. Okay, capital gain is like, let's say you bought a bunch of Apple stock 10 years ago and then you sold it tomorrow for a lot more than you bought it for. And in addition to that, we've also cut back inheritance taxes. This is if you had a really rich uncle and he left his house to you. Normally, if you were to take ownership over that house, you would have to pay a tax on that inheritance. So we've rolled that back as well. As a result, then, the United States government is not able to collect as much revenue and provide the same extent in the form of social goods that would boost the lower and the middle class. In addition to these things, we have also heavily deregulated the financial industry, especially during the Reagan era and the 1980s. A lot of that deregulation is what led up to the 2008 financial recession. Related to this one, we don't spend as much on public education anymore, and we have a higher percentage now of uneducated immigrants living in the United States who are working low-skilled, low-waged jobs. So they also tilt the scales and subsequently make income inequality and wealth inequality look bad in this country. Lastly, technology and globalization has also accentuated the economic disparities in this country. This is what I want to focus on this week in this module. The role in which specifically automation and artificial intelligence has played in making economic inequality worse and making it harder for Americans to achieve economic mobility. So it's estimated that within the next 20 years, 47% of all jobs in the United States are at risk of being automated away. What does this mean to have your job automated away? Well, I'll give you an example, something that we can all relate to. When you went to Target 5 years ago, or you went to Walmart, or you went to the grocery store, you stood in a line, a checkout line, and there was a real life person who scanned the products that you were purchasing that you paid with cash or with a credit card. Now, when you go to Target, you go to Walmart or the grocery store, there are self-checkout aisles where you just scan the items yourself in the computer and you have to listen to that obnoxious automated voice in the background, right? Please put bananas in bagging area. Please put milk in bagging area, right? Anybody struggle with those machines? I certainly do. So the fact that those machines have replaced cashiers at places like Walmart, Target, or the grocery store, that's what it means to have your job automated away. If your job has been automated away, that means that instead of a person taking your job, stealing your job from you, a machine or a computer has taken away, stolen that job from you. Now, the mistake that a lot of people make when thinking about automation and even artificial intelligence and its potential to do away with jobs in the United States is we oftentimes think that low-skilled, low-waged jobs are the only ones under threat. But now it seems as though there are jobs that require years of education, years of expertise that also may be automated away. An example of this, if you look right here to the right, an example of this would be like an economist or a real estate agent, an accountant, an auditor, right? Commercial pilots, right? These are jobs that pay really good money. These are jobs that most people in the middle class or upper middle class work. There's potential that those jobs could be done away with too because there's a machine or there's a computer system that can do those jobs better than real life human beings can. In the meantime, though, when you listen to the Andrew Yang podcast interview with Ezra Klein at the end of this module for your reading response, you're going to hear that Andrew Yang is going to argue that the automation revolution is already happening and the industries that are losing the most jobs right now are the retail industry and the transportation industry, okay, in addition to warehouses and logistics centers. Why is that relevant to you guys? Well, we live in the Inland Empire. A lot of the jobs here are based in logistics and warehouses and transportation. You may actually work in the Amazon warehouse or you know somebody who does. So this is something that is really relevant to your own personal lives, right? In addition to this, the automation and AI revolution is already impacting our political institutions. What do I mean by that? Well, if you look at why Donald Trump won the 2016 presidential election, you would see that when you look at the electoral map, the states that typically vote for Democratic presidential candidates that in fact voted for Donald Trump in 2016 and made it possible for him to win the Electoral College and the presidency, those states are states in what we call the Rust Belt. Michigan, Pennsylvania, Wisconsin, those states voted for Donald Trump. How does this connect to, how does this relate to automation and AI? Well, a lot of people in those states are employed by the manufacturing industry. And Donald Trump knew that they were experiencing a lot of economic disruption in their industries, right? So this is where his tagline, Make America Great Again, comes from. He continued to promise voters that he would bring back their jobs, quote unquote, bring back their jobs. What is he referring to? Well, he's referring to the fact that a lot of manufacturing jobs had been lost in these Rust Belt states. The thing that a lot of us got wrong, though, and even Donald Trump himself got wrong, is that those jobs were lost to China. So if you watch a lot of his campaign rallies, he tells people in these states, I'm going to bring your job back from China, right? Turns out, according to researchers, only 13% of manufacturing jobs were lost to China within the last couple years. The remainder, about 87%, were lost to automation instead. So Donald Trump was right to try to appeal to the grievances of the manufacturing workers in the Rust Belt states. However, he was wrong about the cause of the problem, right? Okay, but in addition to that, automation and AI, like I said before, is not only affecting industries such as manufacturing, but it's affecting every part of the economy, every type of industry. And specifically, automation and AI has made it easier for companies to make money with a fewer number of employees, right? So here's a quote from the researchers, right? This is actually a different article from The Economist called Automation and Anxiety. The author states, when Instagram, was bought by Facebook in 2012, oh my gosh. When Instagram, was bought by Facebook in 2012 for $1 billion, it had tens of millions of users, but only 13 employees. Kodak, which once employed 145,000 people making photographic products, went into bankruptcy around the same time, right? So it would be incorrect to say that automation and AI is coming just for manufacturing jobs or just for transportation jobs, right? A lot of researchers might argue that automation and AI is coming for your job, coming for all sorts of jobs, right? So later on in this module, you're going to read about universal basic income. And Andrew Yang, who ran for president in this last Democratic primary, he eventually dropped out, but he ran for president for quite some time. He argues that the solution to this problem is to pay each American citizen over the age of 18 $1,000 a month, no questions asked. Therefore, that individual, right, can go back to school and learn a new skill, go to vocational school. If they've lost their job at Target, they can learn then how to become a computer coder again. In addition to that, he thinks that some people will never be able to return back to work or get a job. So therefore, universal basic income will provide a sort of buffer that we need in order to ensure that those displaced by automation and AI do not become homeless or are living underneath the poverty line. But one thing I want you to consider, one thing that I want you to think about when you're reading this, is just how costly a universal basic income program would cost, right? So here is a snapshot picture of the federal budget. Andrew Yang's universal basic income program would cost $3 trillion. The United States government spends $4 trillion in total every single year. And look at all the money that we already spend on Social Security, Medicare, Medicaid. The question for you to evaluate is whether or not UBI is too expensive, right?